Imagine you have $100,000 sitting in your bank account. You've worked for years to save it. And now you have a decision to make. Do you put that money into real estate? Or do you invest it in the stock market? At first, the answer might seem obvious. Real estate feels safe. You can see it. You can touch it. You can rent it out. And if the property goes up in value, you could potentially make money in two different ways. But stocks have a completely different advantage. You can buy them in seconds. You don't need a tenant. You don't need to fix a broken air conditioner. And you don't need to worry about a roof suddenly costing thousands of dollars. So which one actually makes you richer? Let's follow two investors. We'll call them Jake and Ryan. Both are 30 years old. Both have $100,000. And both want the same thing. Financial freedom. Jake chooses real estate. Ryan chooses the stock market. Jake uses his $100,000 as a down payment on a $400,000 property. That means he's controlling a much larger asset with a relatively smaller amount of his own money. This is one of the biggest attractions of real estate. Leverage. If the property increases in value, Jake could benefit from the appreciation of the entire property, not just the money he originally put down. And if he rents the property out, his tenant helps cover the ongoing costs. Sounds great, right? But there's another side to the story. The mortgage still has to be paid. Property taxes still have to be paid. Insurance costs money. Repairs happen. And sometimes, there's no tenant at all. A vacant property can still have a very full list of bills. Now let's look at Ryan. Instead of buying a property, Ryan invests his $100,000 into a diversified portfolio of stocks. He doesn't have tenants. He doesn't have maintenance bills. And he can generally buy or sell investments much more easily than he can sell a house. But Ryan has a different problem. The stock market moves every day. One month, his portfolio might be up. The next month, it could drop sharply. And when you see your $100,000 become $80,000 on paper, staying calm isn't always easy. That's the part people often forget. Both investments can build wealth. But they make you work for it in completely different ways. Real estate can offer leverage, rental income, and potential appreciation. But it usually requires more money up front, more work, and more responsibility. Stocks can offer liquidity, diversification, and the ability to invest with relatively little money. But prices can be volatile, and there are no guaranteed returns. So which one wins? Here's where things get interesting. There may not be one universal winner. Because the better investment depends on the investor. Imagine Jake is comfortable managing properties. He understands his local market. He has enough cash reserves for unexpected repairs. And he's willing to deal with tenants and maintenance. Real estate might make sense for him. But Ryan doesn't want any of that. He wants something more hands-off. He wants to spread his money across many companies. And he wants the ability to access his investment more easily. Stocks might make more sense for him. And there's another important factor. Time. Real estate can demand your attention. Finding tenants. Managing repairs. Checking properties. Dealing with paperwork. Stocks can be much more hands-off, especially when using diversified, long-term investments. But that doesn't mean stocks are effortless. The hardest part may simply be staying invested when the market gets scary. Now let's go back to Jake and Ryan. 10 years later, they meet again. Jake still owns several properties. Ryan has continued investing in the market. Both have built wealth. But neither did it by finding a magic investment. They did it by understanding what they were investing in, sticking to a strategy, and giving their investments time to grow. And that's the biggest lesson. The question isn't, which investment is guaranteed to make me richer? There is no investment that can promise that. The better question is, which investment fits my goals, my risk tolerance, my time, and my financial situation? Because the best investment on paper isn't always the best investment for you. And sometimes, the biggest mistake isn't choosing real estate over stocks. Or stocks over real estate? It's investing your money without understanding what you're actually buying. So if you had $100,000 today, where would you put it? Real estate? Or the stock market? The answer might say more about your strategy than you think.